We're in a very unique situation here in Austin. We are getting an abundance of supply in the multifamily sector coming up in the next 2 years. So we're kind of bullish to go ahead and start a few units this year. So we
Mhm.
could be ready in 2026 when the supply is a little down.
What do you think about the future of like the Austin market's going to be, especially this year in particular, with like because like the interest rates have started to go up quite a bit, and I think it was the point of that was to kind of fight off inflation, but it's kind of hurting I guess like valuations of land.
Well, we are in a very interesting market.
Hmm.
One, obviously, you said it, the interest rates. The Fed keeps raising interest rates, and for a construction loan for a developer like us, it's pretty expensive to
Yeah.
go raise money and build a deal. So let's say a good bank, an average rate is going to be around 300 basis points over
Hmm.
what we call a SOFR, standard
Hmm.
overnight financing rate. So
Hmm.
SOFR today is around 4.75, 4.8%.
Hmm.
And add another 300 basis points, and that's 7.8% for your construction loan. Okay,
Hmm.
which is pretty high.
Yes.
But on top of it, we're in a very unique situation here in Austin where we are getting an abundance of supply in the multifamily sector coming up in the next 2 years. So
Okay.
we have averaged about 13,000 units per year
Hmm.
deliveries, and I've heard as much as 40,000 units net coming onto the market. So it could be 40,000 to 45,000 units that may come up in the next 2 years.
Okay.
So so that's going to leave us a pretty good supply. So rents could come down,
Hmm.
and it's good for the renters. Rents
Yeah.
could come down, and there may be some oversupply issues that we might take us maybe 6 to 9 months to work out after the 2 years are up.
Hmm.
So, but on the flip side, I've heard my friends in the brokerage industry tell us that 2026 we're going to be delivering short of what we normally deliver,
Hmm.
primarily because the starts this year has been extremely low. So
Yeah.
because the construction interest is high, so we're kind of bullish to go ahead and start a few units this year. So we
Mhm.
could be ready in 2026 when the market is when the supply is a little down.
Yeah, because just kind of looking at some of the housing market data, sales prices, like the average sales price, has fallen compared to like last year, quite
Right.
a bit. And I think it's just because that is just more to do with because of the interest rates have risen. Buyers' buying power is a lot smaller, and so they've
Yes.
kind of had to adjust accordingly.
We have
So
seen on the
yeah.
multifamily sector, Vema,
Mhm.
to accentuate your point there. In the multifamily sector, we have seen prices fall from last year 10 to
Mm.
15%.
Okay.